Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
Khalid, welcome to the show. How are you?
Good, Sarah. Thanks for having me on here.
I'm excited to have you on. We've been working together for a while. You've done some really cool projects, and since I've known you, you've also transitioned into a cool new role that we'll talk about as well. So you're a real estate investor. You're a realtor. You are an entrepreneur. Give us a quick 30,000 foot view of who Khalid is.
Yeah, so you kind of said it right there. Entrepreneur at heart, real estate investor, have my day job in financial services as well. So kind of all well-rounded.
All right, cool. So your hands are busy. You're definitely doing a lot of different things. When did you start investing in real estate?
Yeah, so the story actually starts like when I first moved here.
Mm-hmm.
When I was 18, my sister and I were tasked with buying a condo. We had like our father's life insurance policy we wanted to use, or that we could use. So we bought our first condo in 2010, kind of started house hacking without knowing what house hacking was. We had a 2+1, rented out the second bedroom. It wasn't until 2019 that we learned about a refinance. So we've owned this property, built equity through it. The first 5 years was kind of pretty, conservative in terms of the appreciation. And in 2017, we started seeing the property values picking up. So in 2019, we were able to access some equity from that property. And we were like, okay, this condo is a great investment. If we can just do a condo like this and have it double in value, every 10 years or something, we'll be pretty well off. So that's what we ended up doing. So with that refinance money, we bought a second condo in Montreal, which ended up being on kind of like a midterm rental. And then from there, we kind of still had some cash left over. And we're like, okay, so what's the plan here? Like, what are we going to do with this remaining capital that we have? And that's when we started looking at like businesses. We're like, how could we generate some more active income, replace our current 9 to 5 income with something? And so we're looking at franchises. So that's kind of where it kind of, started and started to pick up. And then in 2020, end of 2020, we bought our first franchise, which we'll talk about, and then learned about the Burr in 2021 through one of your courses.
Very cool.
And
Now
started using
there's,
that strategy.
yeah, that is awesome. So now your brother Basil, yourself, and I believe your sister, you guys groups your resources together to do real estate. Is that how you've structured it as a family business?
Exactly. So, because that property that we first bought together was like the siblings' capital money that we had, we ended up using all of our kind of borrowing power, myself, like my income, my sister's income, as well as my brother's income, to qualify for mortgages, get lines of credit in order for us to really do these big, larger conversion projects.
Very cool. Now you came to this country. How old were you when you came to Canada?
Officially, I was 18.
Okay. All right.
Yeah.
Very cool. So obviously culture shock, but the really cool thing is that you already, had this discussion with your siblings to buy real estate, which I think is amazing, especially at 18 years old.
Yeah, it was actually my brother that really kind of put it in our minds to start investing in real estate, even like starting the business. He was planting the seeds in our mind, and we're like, we're still young, we're in our 20s, we didn't really know like what the value of investing was. But fast forward till today, I'm like, thank goodness we did that.
Very cool. So I don't want to age you, but like just for like context, like how many years ago was that you bought that first condo?
That was 2010, so I'm 31 now, 18 at that time.
Okay. All right. All right. Very cool. So are there challenges and or are there pros and cons to working as a family?
Absolutely. There are definitely pros and cons. we each have our different personalities, our different way of doing things. And it's really just, being able to leverage each person's strengths and weaknesses. Or like, let's say with my weakness, which I know what it is, my brother kind of fills that gap for me, you know what I mean? And kind of vice versa. So in some ways we kind of complement one another, kind of bridging our weaknesses through each other's strengths, which has been great. And it's also like just doing business as a family. There's still expectations you have in place, right? They still put you accountable. You still don't want to um, make them, like, you don't want to disappoint them as well.
Mm-hmm.
So, and it's also just a lot easier to communicate when it's family, or at least like with me and my siblings. We're very, very close. So we have a different type of bond than I would say most other siblings.
Yeah, you guys make it work. I mean, I can't say the same. I mean, it's hard. It's hard to do business with family, but you guys find a way to make it work. And like you said, you complement each other with different parts of the business that you each work on, which is awesome.
Yeah.
And I will say it's rare to find, three people that are motivated by entrepreneurship and business and really working together. Sometimes there's the family drama and things. I'm not saying that you guys don't have that per se, but I think that the fact that you can make it work and get along and all kind of like have the same goals and move, that's really, really awesome that you guys have that and you're continuing.
And I think that's the biggest thing, right? Is the fact that we're all aligned in terms of what our goals are.
Yeah.
So we know what we're working towards. So with that end vision in mind, it's kind of keeping us all in check, and kind of motivating one another um, to strive for that goal that we've kind of set in place for ourselves.
Yeah, for sure. So you started in 2021, I guess, really actively doing it, in a bigger scale, and obviously there's challenges with the pandemic and there's challenges now with the higher rates. As an investor, and just seeing the market, being in Ontario, investing, and also probably from a realtor standpoint, what are some of the challenges right now that you're seeing, whether you're facing or you're seeing others face?
Yeah, so there's definitely a risk right now. Well, not just now, like in real estate investing in general, there's always risk, right? So right now, what we're seeing is kind of the unpredictability in where prices are going. So where you expect your refinancing to end, where rates were going, what you can qualify for in your exit. That's kind of one kind of risk we're seeing. And then being in Ontario, you also have that risk of the tenants, right? It's not very, call it like, same level ground between landlords and tenants. Tenants seem to have kind of the upper hand with the LTV. So you just kind of have to pick and choose, right? Like understand what risk you're getting into, and then be conservative in your approach. So whether that is doing a conversion, that's going to take you 12 months, 18 months to complete. You don't know where the market's going to be in 12 to 18 months. How can you, when you run your numbers, be able to account for, the worst of the worst, which is kind of what we're seeing right now. So right now, that's kind of what I'm seeing is primarily like there's no comps anymore. People's borrowing power has significantly gone down. And then just permit delays as well, right? That was an issue that we had on our last project. We were waiting for like 3 or 4 months just for a fourplex conversion permit to be issued to us.
Yeah, for sure. So you talked about fourplex. You just finished a bigger project, and now I think you're looking for even bigger. Talk to us about your latest project, your latest acquisition.
Yeah, so it was a single family home in Hamilton, downtown Hamilton. It was probably around 2,000 square feet when we first got it. At the time that we finished the renovations, we were able to add some extra square footage in the attic. So it ended up becoming about 2,500 square feet. But that project took us probably around like 16 months to complete. From the time that we closed on the property to the time that we were able to refinance, which was just last week actually. Lots of hurdles there, like when we were first buying the property, Scotia was our initial lender. We had a commitment with them. Last minute, they kind of backed out of the deal, and we were firm on that property. So we had to act quick, find a private lender to come in as a first mortgage. And then kind of throughout the beginning, we were having, kind of break-ins in the property, given that the property was vacant. We had some concerns with like inspection during the renovations. Inspectors would come in and ask us to do some additional work. And then just being able to close off the permits and then do an appraisal. The appraisal came in not what we were expecting. It came in quite lower than what we were anticipating. But again, it's because of the fact that there's no comps that can, suggest a higher value of the property. But the thing about real estate is that, if you're not over leveraged, so you haven't taken out tons of debt to acquire the property and do the renovations, it will maybe just slow down your progress. So on how fast you could grow, because of what you can kind of recapture and on the refinance in terms of your equity. But if you just kind of, wait it out, stay in the game a bit longer, property values will come back up, the markets will become better. So it's kind of, I'm not going to say a win-win, but we'll see how it goes from there, right?
Yeah, I think a market like this is going to be, in that strategy, in the conversion strategy, probably a couple refinances as the market starts restabilizing and rates start coming back down again. And
Exactly.
comps can, they can only go back so far. And when certain comps are able to be used, that's great. And then once they get off of the books and the appraisers can't use them again, that's, there's always a risk in everything. And there's always cycles. And right now we're seeing I think some of the worst times that we've seen in the last 10 years as an example for Ontario real estate and real estate investing. And from a realtor standpoint, I mean, I know you just started from a realtor standpoint, but like, what are you seeing, others? Are they staying on the sidelines? Are they buying? Are they, jumping in? Like, what are you seeing on your end there from that point of view?
Seeing a lot of people just worried right now, especially back in 2023. Folks were kind of on the sidelines waiting. We don't know where interests are going to be like. But, the perspective they should be taking is, no one has a crystal ball. No one knows where the market's going to go. Run your numbers as they are today. And does it make sense at this high interest rate environment, right? If the numbers make sense, especially if you're doing something more turnkey, where you're not, renovating and holding the property for 12 months to then refinance and have like a new mortgage down the road. But if the numbers are making sense for you right now, then go for it. Because once rates start to come down, you can always refinance and your mortgage amount will just be smaller, right? Mm-hmm. But for some reason, interest rates scare people more than property values, because when values were super, super high, but rates were low, everyone wanted to buy properties, right? But for some reason, interest rates scare people. But like as an investor, you should see interest rates as just as an expense on kind of your P&L, right? It's just, we're always going to have interest to pay off, kind of right now because rates are higher. It maybe could be more of a benefit to you from a tax perspective, paying off more interest. But again, it's, time in the game and don't look at it so short term.
Yeah.
Also, when it comes to like investors, there's so many different ways people can invest, right? Like if you're more conservative, you can always just invest in the REITs or in a public REIT or a private REIT. You could be, you can lend out some money instead of doing, a full renovation, right? So there's different types of strategies people can get into, kind of depending on what they're more comfortable doing.
Yeah. And I just had a student that bought, like, cause he's going to move into one of the units, pretty much a turnkey duplex with 5% down. And it works, it works. And so sometimes in some markets, the strategy can change, right? Where, maybe the BRRRRs make more sense in a different type of market, or, buy and hold make some sense in a different type of market, or, and I think you guys are looking at some bigger stuff as well. So I
Yeah.
think it's always market dependent, and it's, strategy and timeline and, goals, that kind of stuff will play a factor
There's
in.
definitely interesting strategies that people are doing right now. They're kind of mixing and matching multiple at the same time. I'm seeing there's a building in Etobicoke that was bought out by one of the larger REITs, and it was an apartment building. And what they ended up doing there was they converted the apartments to condos, renovated the units, and then did a rent-to-own strategy for all the tenants that were in there. So they're being kind of creative in the way that they're analyzing these deals and assessing them. So there's different strategies. You just need to figure out like what works well for that property and in the market that we're in.
Yeah, I think you talked to me about that. That is pretty cool. So they bought the building with the tenants, they converted into condos with paperwork and everything, and now they're gonna have the tenants become the tenant buyers down the road.
Exactly. So yeah, it kind of made sense. I'm like, whoa, that's like he was talking to me about this like at 7 a.m. when I was dropping off my mechanic, and I was like, I walked out and I was like, I need to go back in there and ask him a bit more questions. Like, this is so cool. So yeah, I thought that was a very interesting strategy that I haven't been seeing many people do it.
Yeah, absolutely. In hard times like these, the creativity comes even more. And if you can, get creative, and actually negotiability too, the ability to negotiate like with, probably some people that would do VTBs more so now than they used to before, because, they still want their price potentially, but they can't sell. There's many different options. I think it's interesting. I want to go back to, so you just completed a four unit conversion. You're also a realtor. You're also a franchise owner. Let's talk about the franchise. What is the franchise, and why did you decide to do the franchise?
Yeah, of course. So the franchise, it's called 5 Star Painting. It's a painting franchise. And the reason why we really got into it was I had a dinner with my ex COO. And I was talking about my goals and my ambitions. And she kind of humbled me. She was like, corporate life is not really going to give you that kind of lifestyle that you're looking for. And at the same time, my brother was thinking, hey, like, let's get some more active income. And that's fine because we've never had a business before. The easiest way for us to get into something would be something that, there's a proven process, a proven track record, that we kind of just piggyback off of that, right? But that wasn't really what we ended up getting ourselves into. It was a lot of learning, and it really fell on like us as operators to really grow the business. So the first 6 months of the business was very slow. We probably did a couple of projects, and then year 2, year 3 started to pick up, but we weren't seeing the momentum that we wanted to see. So it actually got to a point where we're thinking about completely exiting this. We're like, hey, maybe this is not the right business for us. That sale didn't go through, which right now I'm very fortunate that it did not go through. And it kind of your mindset, the way that you approach things, the way that you have to be creative again, right? Like, what are all the other operators doing? They're all relying on the Google ad spends. They're all relying on Homestars, on lead aggregators. But that doesn't take you so far. And the closing rates on those are usually about 20-30% because you're competing against other folks. So I took a different strategy. I started focusing more kind of on the commercial space. So
And guys, I think this is really important because you went and you thought outside the box to get your clients. I just want to add that before you say the next piece, because I think it's important that people understand that this is a really cool, what you're going to say is a really cool, unique way of getting business. And you could do it in different, industries as well.
Yeah. So I did kind of multiple different strategies. One of which was I made a relationship with like an Ontario College Association. And I was awarded one project. They liked working with me. Turns out that just contractors in general, the bar is set so low in terms of communication, in terms of managing expectations, timelines, throwing out change requests and raising prices. So just through building those relationships, they've been keeping us quite busy across multiple different colleges that they have around the GTA. And another strategy that I took was reaching out to paint stores, right? Usually painters will just go throw out their business cards, but I kind of incentivize them. So, if they were to go out, get a lead for me or get a project, I would, incentivize them for giving me those leads. So it's a little bit different than what other folks are doing, but it's really been able to grow the business like quite significantly, which again I'm proud of. But I'm not kind of just stopping there, right? Like now that we've done this, it's like, what's 2024 going to look like now? In 2025, 2026. So there's again other ways you could get into it. Even working with different realtors. So I've been
Right.
really pushing it out to different realtors, letting them know that we offer these different services. Plus, we also start focusing on work that other painters don't like doing. So we do like wallpaper, for example, popcorn removal. We do like lacquered paints. So basically, I don't know if you've ever seen it, but where you look at a wall that's been painted, but you can kind of see your reflection. It's kind of like a glass, like a mirror. So we're one of the only contractors in the GTA that can do that kind of work.
Mhm.
So just, with the service that we're offering, with the way that we're getting new clients and, retaining our existing clients and getting all those referrals, it's really like growing the business for us.
Yeah, no, I think it's a great idea to just go directly to the paint stores because clients are going in there because they are looking at painting something and
Yeah,
incentivizing those guys that probably make, I don't know, maybe minimum wage. I don't know, I'm just guessing. Incentivizing them to give you leads and referrals.
yep,
And you're paying them on the book jobs, right? The ones that are actually going through.
exactly. So
That's
if I
that's
don't
awesome.
end up closing the job, I have no costs associated with that, right? Versus
Mhm.
on like Google paid ads, you could pay $200-300 for leads, not close it. So again, you just kind of, how do I manage my expenses, increase my revenue, kind of keeping everything in check and in line.
Yeah, no, absolutely. So, okay, so now you're a realtor, you're a real estate investor, right? Like I think from the three of you, you're the more like on the feet on the street and
Yeah,
of the three, right? You're the one
yeah,
that's, mostly going to the properties and dealing with the management or the contractors, that kind of stuff, because your brother, I believe, is in Dubai and your sister, is she living here? Or is she in Montreal?
no, she's in Toronto.
Okay.
She's focused like on her corporate job. She's working on, she has a passion for health and wellness. So she's
Hmm.
been working on some
Cool.
projects in that space.
Hmm.
There's actually like I actually also started kind of a new business line, which is managing properties. So I've started managing commercial properties in Toronto. And again, it's all interconnected, right?
Hmm.
Tenants turnover, I'll get those leases. Renovations and maintenance that's needed on the properties will go through, the business and, fostering those relationships. And
Hmm.
eventually, always, another business line that the family would want to continue to grow is getting into other real estate, businesses, one of which is property management.
I mean, I think it's very smart of you guys to have intertwined them all, right? Where one client could be another client for another one, and then also being a property manager for these larger commercial types of properties that you may want to purchase down the road as well.
Yeah.
I know you guys are looking for those bigger deals too. So it is definitely really smart to do it that way. So I guess my question though is, you still work full time on top of this. Like, how do you even have time to do this? Like, do you sleep at all?
My mornings start quite early, and they end quite late. I'm usually working about 7 days a week, so Monday through Sunday. The odd time, like, I still need a social life, right? I'm still human at the end of the day. If I can, squeeze in a dinner, enjoy myself for a couple of hours, that's kind of all that I need. I've also really optimized the way that I do my work, right? So, um, when I'm working on my corporate job, I'm focusing on that, getting everything that I need to get done within those hours. And then on the real estate side, kind of manage my schedule accordingly. But again, like, once I have the guys on a project, I'm pretty hands off at that point. I've built a team where they understand my level of expectations. So I don't have to go visit a job site every single day. And getting new leads, I know that within a half an hour meeting, I could close a deal and move on to the next. So it's not really running around as much anymore, like I used to in the past.
Having a
So
team is obviously important, right? And people that you
yeah,
can rely on. And by the way, if you guys do follow Khalid on Instagram, I'm always jealous of the meals and the restaurants that you find because I'm a big foodie like you as well. And I don't know how you find like these crazy restaurants. I know like I miss Toronto because obviously the food scene in Toronto is awesome, but you're, always finding those hidden gems.
yeah. I mean, summer's coming up soon. We could get it together.
Oh man. So what advice do you have for, somebody that like I know you have what about 10 properties or 10 doors right now. Somebody that's not too sure, do they keep going? Do they wait? Do they sell? Do they buy? What insights do you have, I think, for somebody just kind of like trying to figure out the next best move that might have a handful of real estate, but not too sure how to continue or if they
I,
should continue.
I think the biggest question is like figure out what their goals are, where they're at right now. Because again, there's so many different strategies, right? Like even buying pre-construction. It's not a strategy I would do, but for
Mm-hmm.
some people, it might make sense. So talk to people in the space, hear different opinions, and don't be shy to ask around, right? Everybody has a different perspective of things. And my perspective is if you really want to be active, educate yourself, right? Educate yourself, get yourself a mentor, get yourself a coach, go to seminars. The multifamily conference is coming up in just a few months. Highly suggest going there, hearing what people have to say. But kind of immersing yourself in real estate and then hearing about what other folks are doing. And you never know, you might be able to meet a partner at one of these events, whether it's a networking event or a seminar or the conference that you kind of can relate to and get and work well together with. And maybe that's the right thing for you. But to generalize it as like, what's the right step or the right investment, it's difficult to say until you get to, speak to that investor and, see where they're at and what their goals are and where they want to be.
Very cool. So as a realtor, which areas do you cover?
So I focus primarily in Toronto. But since I've been investing in Hamilton, I'm also quite, versatile and comfortable in Hamilton as well. So those are the two markets that I've been focusing on, Toronto and the surrounding areas, and then Hamilton as well.
Okay. And as an investor, what are you looking for?
Hamilton.
What are you looking for in Hamilton though? Like
Oh, I'm
what?
looking for anything that's more in the like commercial. So a property where me as the investor, owner, operator can set the value of the property, right? So I can manage the rent, I can manage the expenses, where it's not really based on comparables. So looking at the 5+ units, whether it's partially vacant, fully vacant, something with some upsides, that's what I'm looking for. Whether it's increasing the develop or the use of the property, so taking something that's 10 unit, making it to 13, 14 units, or taking something that's existing 10 unit and just cosmetically renovate them, increase its efficiency, and then rent them out.
Okay.
So
Okay, very cool. Now, are you looking for partners in these projects?
always looking for partners. Yeah.
What kind of partners would be like an ideal partner?
I would say the ideal partner would be somebody that definitely has access to capital. So whether that's through, lines of credit or some savings, that they are too busy in their corporate world, and kind of, focused on that. They don't have time or the energy or the team to start investing, but they're interested in investing in real estate. I would say they're kind of best for me. I actually had met a friend over the weekend, who's a doctor, and turns out these doctors have professional lines of credit that's almost $400,000 that they sometimes they don't even use. So again, if you have access to equity, and you want to start investing, I think one of the best ways as well, if you do want to be an active investor down the road, is to partner up with somebody that's done this before, learn the ropes, be able to like pick their brain through the process of acquiring the property, repositioning that property, so taking it from its current state to its future state, and then refinancing it, right? So doing those deals with somebody that has a team in place, is also a great way to get started in real estate.
Mm-hmm. Yeah, absolutely. Awesome, Khalid. That was great. Thanks for sharing your insights, and congrats on your success so far. And also starting at 18, I mean, that not many 18-year-olds already have it in their mind that they're going to go ahead and do that. So that is awesome. Where can my listeners reach out, find out more about you, and connect?
So I'm pretty active on Instagram. I think you'll share my handle in the notes. It's just Khalid Atab, KhalidAtab. Or you can text me. I'm also quite active. 647-982-2822. Which will probably also be in the show notes.
Perfect. Khalid, thank you so much for being on the show. It was a pleasure having you on, and congrats on your success, not only from a real estate standpoint, but also you're truly an entrepreneur. You've got an active business as well, too. Actually, I should say the property management starting that you're building right now, plus the painting company that you've basically grown and exponentially grown very recently as well, and managing your realtor clients and everything in between, and also finding some of the best places to eat in Toronto. So I will say, I think you win that trophy for knowing where to go to get the best food. Anyways, on that note, thanks so much for being on the show.
Thanks, Sarah.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?